Assalamu alaikum wa rahmatullahi wa barakatuh, everyone. Good afternoon and welcome to a new webinar organized by the Institute of Islamic Economics and Finance. Today, we are honored to host Professor Abdulazim Abu Zaid, who will be delivering a webinar entitled Rebuilding Islamic Finance on Maqasid Foundations. Professor Abdulaziz holds a PhD and master's degree in Islamic financial law. He also holds 3 bachelor's degrees from Damascus University and Al-Azhar University in Islamic law, English literature, and Arabic language, in addition to 2 postgraduate diplomas in Islamic law and human sciences. He has worked both in academia and Islamic banking. He is currently a professor of Islamic finance at Hamad bin Khalifa College of Islamic Studies in Doha, Qatar, and at Marmara University's Institute of Islamic Economics and Finance. Professor Abu Zaid has published extensively in both Arabic and English in several prestigious journals. His work has made significant contribution to Islamic finance, particularly from a fiqhi Maqasidi perspective. The webinar will last, inshallah, approximately 45 minutes, followed by an open discussion and a Q&A session. Without any further ado, Professor, the floor is yours.
بسم الله الرحمن الرحيم الحمد لله رب العالمين وأفضل الصلاة وأتم التسليم على سيدنا محمد وعلى آله وصحبه أجمعين وبعد. I would like first to thank the Marmara University for inviting me to give this talk. This talk, inshallah, is going to be about the Maqasid al-Sharia al-Islamiyya in the context of Islamic banking and finance. Of course, I know that, let's say, my audience, of course, are aware of the meaning of the concept of Maqasid al-Sharia al-Islamiyya. Maqasid al-Sharia al-Islamiyya refer to the general objectives of, or the ultimate objectives of Islamic law. So when it comes to Islamic financial law in particular, of course, there are some maqasid that are specific to this domain. We know that Allah subhanahu wa ta'ala, when Allah subhanahu wa ta'ala, of course, enacted this Sharia Islamiyya, it was meant, of course, for our ultimate good. As Allah subhanahu wa ta'ala says, وَيُحِلُّ لَهُمُ الطَّيِّبَاتِ وَيُحَرِّمُ عَلَيْهِمُ الْخَبَائِثِ, which means that whatever has been deemed by the Sharia as lawful, then it's necessarily useful to human beings. And whatever is prohibited, of course, it's harmful and bad for human beings. And this would, of course, would include and encompass our financial dealings in general. So, of course, when ulama of maqasid, ulama al-maqasid al-sharia al-islamiyya, when they speak about maqasid, they define 5 essential values that relate to the protection of life, of religion, of life, of lineage, of wealth, and also of the intellect. But in addition to these ultimate objectives, we have also the so-called specific maqasid. The specific maqasid are the ones that relate to a particular domain within the Sharia Islamiyya. So in the context of Islamic finance or Islamic financial law in general, we have maqasid that are specific to Islamic financial law, like, let's say, the protection of wealth, like, let's say, that fairness in financial deals, avoidance of injustice, clarity and lack of ambiguity, or lack of uncertainty. This is also one of the Sharia objectives that are unique to Islamic finance. Now, the issue now with the current ijtihad or the contemporary ijtihad in the context of Islamic financial law is the fact that sometimes these maqasid have been somehow overlooked or neglected by the contemporary ijtihad in the context of Islamic financial law. Now, this is like evidenced by the fact that sometimes we look into certain fatawas and we find them, departing from the maqasid as outlined by the Sharia Islamiyya. So this ijtihadat could be either, let's say, unnecessarily rigid or excessively lenient. So I'll give you some examples now. Sometimes the ijtihadat in the field or in the domain of Islamic financial law, sometimes, the contemporary ijtihad, if you look into them, you'll find them sometimes unnecessarily lenient or unnecessarily rigid, or sometimes excessively lenient. I'll quote some examples for you. For example, when it comes to combining contracts together, like al-jam' bayn al-uqud, as we say in Arabic. So there's hadith in which Nabi Sallallahu Alaihi Wasallam says that we are not supposed to combine between contracts together. So like لا يجتمع لا يحل سلف وبيع ولا شرطان في بيع. And Nabi Sallallahu Alaihi Wasallam عن البيعتين في بيعة, which means that we are not supposed to combine between two transactions in one transaction. So here we have to contemplate let's say what we call the Sharia objective behind such a prohibition, because as I said, every single Sharia rule is meant to realize a certain objective. And it's very critical and important to try to define and identify this objective, because if we fail to observe the objectives of the Sharia rules in the field of Islamic financial law, then this would cause a misunderstanding of the Sharia rules pertaining to Islamic financial law. And this will also lead to, let's say, wrong applications of the Sharia rules. And this also will impact the capacity or the ability to develop and expand in the Sharia rules. I mean, using analogy. So when we issue an ijtihad, or when we issue a fatwa or perform ijtihad in the field of Islamic financial law, we need, of course, to know the Sharia objectives of this particular law. Like why Allah subhanahu wa ta'ala has prohibited riba, why Allah subhanahu wa ta'ala has prohibited gharar, what constitutes gharar, what's uncertainty, what's ghabn, why would the Sharia prohibit combining two contracts together, what's wrong with that? Why would the Sharia, whenever, let's say, we sell a currency for a currency, that the transaction has to be on the spot? Why we are not supposed, for example, to sell, to engage in future contracts? So we need to identify the Sharia objectives behind these rules in order to be able to rightly implement them. Because if we don't know the Sharia rules, then we tend to sometimes to misapply the Sharia rules. And our ijtihadat will tend to be wrong. And this is evidenced by the contemporary ijtihad. Sometimes the contemporary ijtihad in the field of Islamic financial law, we find it sometimes departing from the Sharia objectives. Like, let's say, as I said, Nabi Sallallahu Alaihi Wasallam, which means that we are not supposed to combine two contracts together. So those who will, like, let's say, take the outward meaning of the hadith, of the Sharia text, we say that whenever there are two transactions in one, they will say this transaction is invalid, it's haram. Which is, I mean, if we consider we consider the Sharia objective behind such a prohibition, then we'd find that such combination of contracts is invalid or is haram only when it leads to let's say, to an evil, or in cases where, let's say, the ultimate result is like, contradicting one of the basic Sharia rules in the field of Islamic financial law. Like what? Like bay al-ina, for example. So in bay al-ina, you know that it's bay al-ina is a legal trick to riba, and it involves two consecutive sale contracts. So I would sell you something on credit, for example, for $1,100, then I will, on the spot, immediately after that, repurchase it for 1,000 cash. So here the transaction, as it's obvious, it boils down to a conventional loan, because you need 1,000 cash. So I would sell you something on credit, like selling my watch for 1,100 on credit, so you don't have to pay anything now. But immediately after, let's say you purchase my watch for 1,100, I will buy it back for 1,000 cash. So I'll give you 1,000 cash, and you remain indebted to me for the 1,100. So here we are combining between two transactions, between two sale contracts in one transaction, in a way that will lead to riba. So here it makes sense. This is rational. I mean, this is like, let's say, it's obvious that the hikmah, the wisdom behind such a prohibition, combining two transactions as one, is the fact that let's say it's in conflict with the prohibition of riba. Because if such combination of contract would be permissible to the Sharia, then people would comfortably avoid riba by engaging in such a transaction. So the Sharia would prohibit such combinations of contracts. Another example, نهى النبي صلى الله عليه وسلم عن بيع وسلف. And salaf means loan in general, lending. And bay' means sale contract. So why would the Sharia prohibit combining sale contract and loan in one transaction? Because there's a likelihood, there's a possibility that, let's say, the price will be determined in the interest of the creditor. So, for example, I would say I wouldn't lend you money, interest-free loan, unless, let's say, you buy my watch. For what price? For a price above the market price. For example, the market price of my watch is, let's say, $100. So I would say I will lend you $1,000 only if you buy my watch for $200. So I'm demanding a price which is above the market price. So here, this, let's say, this is indirect way to charge interest. Or it could be that I would say that I will lend you $1,000, let's say, interest-free loan, but only if you sell me your watch. For how much? For a price which is significantly lower than the market price. So again, I'm here charging interest indirectly. So such a combination between a loan contract and a sale contract is prohibited in the Sharia Islami. Why? Because it's used here as a subterfuge, as a legal device to deal in riba. But if, let's say, the combination of two contracts together wouldn't lead to any breach of the Sharia rules in a way that wouldn't, let's say, defeat any Sharia purpose, then such a combination of contract is acceptable in itself. So we have to, this is an example that shows us that we need to contemplate what we call the implication of the contract or the Sharia objective behind a particular Sharia rule. Because if failing to do so will lead normally to misapplication of the Sharia rule. Like, let's say here, unnecessary rigidity. So, but if we, for example, the combinations of contract wouldn't lead to any evil in itself, then why would it be haram? It should be fine. And this is according to the vast majority of Sharia scholars. They say that, especially Ibn Taymiyyah and Imam Ahmad bin Hanbal, they say there's no harm in combining contracts together as long as, let's say, the end result is not in conflict with the Sharia objectives. Another example, let's say, in the field of prohibition. So, this is an example of how failing to let's say, to appreciate the Sharia objectives or Sharia rules would lead to, as I said, to unnecessary rigidity. I'll give you now an example of excessive leniency. So, for example, the Sharia prohibits lending on interest. So sometimes you find Sharia personnel, or let's say Sharia scholars or contemporary ijtihad giving fatwas that defeat the purpose behind the prohibition of riba. Like, let's say, legalizing a sale contract like bay' al-'ina, just like the one that I've already explained to you. Like, let's say, the example of selling a watch for 1,100 credit and then buying it back immediately for 1,000 cash. So if we look into the form and structure of such transaction, would say that it should be valid. Why? Because it's just nothing but a sale contract followed by another sale contract. Everyone is independently permissible. So when they have them executed together, then it would be also permissible. But if we look into the Sharia objective behind the prohibition of riba, and we look into the structure of such a transaction, the structure of bay' al-'ina, then we'll have to say that such a combination of contract is unacceptable to the Sharia, because the end result is what? Is dealing in interest indirectly. And the same also goes for tawarruq sale. In tawarruq sale, we don't resell the same commodity to the same party, rather we sell it to a third party. For example, you need cash, so you approach to me for financing. So I would ask you how much cash you need. You will say $1,000. So okay, I will sell you a commodity on credit for 1,100 credits. So you don't have to pay me any now, and you don't have to pay me anything now. So you pay, let's say, in installments. And then after I have sold you the commodity, I wouldn't repurchase it back, because this would mean 'ina, and maybe to me 'ina is unacceptable. But rather than repurchasing the commodity for itself, I will try to find someone to buy it from you for a cash price, for a spot price, for 1,000 cash. So end result remains the same, because you've been financed, you've been advanced $1,000, and you will have to repay the $1,000 with $100 extra, which is the original credit price. So obviously this transaction now this transaction in terms of substance is no different from a conventional loan. But we just, tried, we used a technicality of sale to legalize what's prohibited, to legalize the exchange of money for money. So here, of course, if we don't understand why Allah subhanahu wa ta'ala has prohibited riba of sale, riba of debt, then we end up accepting transactions such this tawarruq or this ina, even though the end result is no different from the conventional loan. So that's why it's very critical and it's very important for us to understand the Sharia objectives in order to be able to avoid the haram or to rightly implement the Sharia rule. Now, I will quote Ibn Taymiyyah. Just I will have to quote him in Arabic first, then I will translate the quote. So Ibn Taymiyyah says, وَقَوْلُ الْقَائِلِ بِعْتُكَ ثَوْبِي بِمِئَةٍ على أن تبيعني ثوبك بمئة إن أراد به أن يبيع كل واحد منهما ثوبه انعقد بهذا الكلام. قال فهذا نظير نكاح الشغار، ولكن ما الدليل على فساد ذلك؟ وهو كما لو قال أجرتك داري بمئة على أن تصير دارك مؤجرة لي بمئة. قال وتحريم هذا يحتاج فيه إلى نص أو إجماع ليصح القياس عليه. So here Ibn Taymiyyah in his renowned book نظرية العقد says, he says that there is no reason to deem any combination of contracts unacceptable to the Sharia. Rather, we have to consider what we call the essence. So he says there is no harm in, make a contract conditional on another contract as long as the end result is acceptable to the Sharia. But let's say if it's the other way around, when the combination of two contracts, let's say, is yielding or is leading to something unacceptable to the Sharia, then the very combination of the two transactions would be unacceptable. Like, let's say, saying, I sell you my house only if you rent me, for example, your property. So the conclusion is that, having two contracts in one in itself is not haram for itself. Rather, it's haram only when it leads to something, let's say, abhorred or unacceptable to the Sharia, or when it involves, like, let's say, lack of clarity or it leads, let's say, to uncertainty or ambiguity in the contract, like, let's say, making one contract conditional on the other. Now, if this is the fact, if we come to the conclusion that we have to consider the Sharia objectives when it comes to the particular rules of the Sharia in the field of Islamic financial law, then this will incentivize, this will give us, let's say, the incentive to reconsider certain Sharia rules. In the context of, for example, of the context of Bay' al-Ma'dum. Bay' al-Ma'dum is the sale of non-existing assets. We know that Nabi Sallallahu Alaihi Wasallam said once, لا تبع ما ليس عندك. Don't sell what you don't own. لا تبع ما ليس عندك. Don't sell what you don't own. And there's another hadith نهى النبي صلى الله عليه وسلم عن بيع المعدوم. لا يحل سلف وبيع ولا شرطان في بيع ولا ربح ما لا مضمن ولا بيع ما ليس عندك. So the sale of non-existing assets or the sale of assets not owned by the seller. Now, if we try to contemplate the what we call the Sharia objective for such a rule. Now, according to some scholars like Ibn Taymiyyah, like Ibn al-Qayyim or Ibn Qayyim al-Jawziyah, they say that this prohibition is not meant for itself. It's meant only to ensure that the two contracting parties will be able to execute the transaction. So if, for example, if there is someone who doesn't own an asset, but he decides, let's say, to sell an asset which is existent in the market, which is accessible to him, yet he doesn't own it, to Ibn Taymiyyah and Ibn al-Qayyim or to Hanbalis in general, they say such a transaction is acceptable, even though the seller sells what's not existent at the time of sale, or he sells what's not owned by him. So to those scholars, they say that when Nabi Sallallahu Alaihi Wasallam prohibited selling non-existing assets, the objective was to ensure that the seller will be able to execute the transaction will be able to fulfill his commitment of delivering the assets. So if, let's say, according to the market custom, according to, let's say, to the commercial custom, the seller would be able to deliver what he sells, even though he doesn't own the commodity at the time of sale, such a sale contract will be acceptable. So to them, the sale of non-existing assets applies only to cases where the seller is unable to deliver the assets. Like, let's say, by selling things that have not been manufactured yet, or assets that are unique in the market, and they are not, let's say, homogeneous commodities. They don't have similarities in the market. So in this case, they say that such a sale contract would be unacceptable. But if the commodity is available in the market or it's easily obtainable, then there is no harm on the seller to sell non-existing assets. So that's why to Hanbalis in general, we can engage in a sale contract. It doesn't have to be bay' al-salam. It doesn't have to be istisna' contract. In general, the seller will be able, let's say, to sell non-existing assets as long as the seller is able to source these commodities. Like what? Like, for example, like now selling commodities on the internet. Like, let's say, in drop shipping. In drop shipping, for example, you find the seller just displaying certain commodities on the internet, while the seller doesn't own these commodities. But I mean, once you click on one of these assets, then the seller, I mean, the owner of the platform would be notified. So based on prior arrangements, he would be able to source this commodity and deliver it to the buyer. So according to, I mean, to this ijtihad, which is really in line with the Sharia objectives, such a sale contract is acceptable, even though the seller doesn't own the asset. Why? Because the asset is easily obtainable by the seller, so there will be no reason to deem such a sale contract unacceptable to the Sharia. So again, this is like an exercise of how appreciating, or let's say understanding the Sharia objective behind the Sharia rules will help us, let's say, issue the right ijtihad in our age. Now, when it comes, let's say, to the implementation of such ijtihad in the domain of Islamic banking and finance, we find, for example, in bay' al-murabaha. In bay' al-murabaha, the seller, you know that the bank is not supposed to sell the commodity unless the bank comes to own the commodity and then sells it. Then the bank will sell it, of course, to the buyer. But if we adopt such an ijtihad, we'll be permitting the Islamic bank to sell commodities that have similarities in the markets. I mean, I'm not talking about unique or mal qimi, because we know that we have the so-called mal qimi versus the mal mithli. Mal mithli is something homogeneous, something that has similarities in the market. Unlike the mal qimi is something unique. So if we adopt this ijtihad of Ibn Taymiyyah and Ibn Qayyim, then we'll have to end up saying that the bank doesn't need to come to buy the commodity first from the market and then afterwards sell it to the clients. The bank can sell the commodity right away on murabaha basis to the clients, and after the bank has signed the agreement with the client, the bank, of course, would buy the commodity and deliver it in turn to the clients. And this, of course, will help the bank, of course, avoid the risks that are normally associated with the normal murabaha sale, because it's feared that the client, after the bank has acquired the commodity, maybe the client will default on his promise, will renege on the promise, and wouldn't come to conclude the contract. But if we adopt this ijtihad, then we'll be permitting the bank to sell the commodity before coming to own the commodity. So the bank will be able to sell the commodity directly to the client, and then after securing the transaction, the bank would be able would buy the commodity and deliver it in turn to the clients. So there is like flexibility if we want to adapt, if we want, let's say, to implement it and to take advantage of it. But now, as I say, that the contemporary ijtihad, sometimes they wouldn't consider the Sharia objectives, and that's why they end up unnecessarily restricting Islamic banking and finance in multiple scenarios, including this one. Now, another issue which also admits what we call considering the Sharia objectives behind its relevant rule the issue of which relates to تأجيل العوضين, postponing two values, the two counter values. You know that in the Sharia, as in the fair payment sale, which is called بيع مؤجل الثمن, the Sharia permits the seller to sell a commodity without necessarily collecting the price. So you see, originally the Sharia would demand both the seller as well as the buyer to deliver what they're supposed to deliver. I mean, the buyer would have to pay the price and the seller would have to deliver the commodity. Exceptionally, the Sharia has permitted البيع مؤجل الثمن, in which the buyer doesn't pay the price. Rather, the price will be paid in the future based on prior arrangement with the seller. And on the other hand, the Sharia would also permit the seller to defer the delivery of the commodity, as is the case of in بيع السلم. In بيع السلم, the price will be paid upfront, while the delivery of the commodity will take place in the future. The opposite of which is the so-called بيع مؤجل الثمن, the fair payment sale, in which the price will be deferred while the commodity will be delivered on the spot. So the Sharia has exceptionally permitted بيع مؤجل الثمن, even though it involves gharar, uncertainty. Where's this uncertainty? Since the price is not paid on the spot, then there is a chance, or there is, let's say, a possibility that the buyer will fail to pay the price in the future. So hence the gharar, hence the uncertainty. And conversely, in the salam contract, the price is paid upfront, but the commodity is not delivered. So there is also gharar here, because the seller may fail to deliver the commodity in the future. So the Sharia has exceptionally permitted this, and there is hadith in which it's narrated that Nabi sallallahu alaihi wasallam نهى عن بيع ما ليس عند البائع ورخص في السلم. So this hadith means that this hadith says that the salam, the permissibility of salam has been enacted exceptionally. It's exceptional. Why exceptional? Because it involves gharar, because the seller is not delivering. So there is also a possibility that the seller will fail to deliver in the future. Now, how about, let's say, deferring both the commodity as well as the price? Can we defer them both? There is hadith نهى النبي صلى الله عليه وسلم عن بيع الكالئ بالكالئ. It's a sale contract whereby both values are deferred. So the price is not paid and the commodity is not delivered. So based on this hadith, the contracting parties are not supposed to engage in such a transaction. Why? Because there is no reason for that. I mean, there is no. Salam, of course, is exceptional, but it realizes a public good, because sometimes the seller is a producer of commodities, like, let's say, a farmer, and he's not able to cover the cost of, let's say, growing crops. So the Sharia would permit him to sell his crops in advance, which is the salam contract. And sometimes the buyer is not able to pay the price upfront because he doesn't have this sufficient liquidity, enough liquidity to pay the price upfront. So the Sharia, this is a public need, so the Sharia has exceptionally permitted بيع المؤجل الثمن. But how about, let's say, deferring both values? According to the Sharia, especially in the days of the early legislation, أيام التشريع الأول, at the time there was, the need for engaging in بيع الكالئ بالكالئ was not, let's say, perceived, because there was no need for it. But nowadays, there is a need for engaging in the so-called بيع الكالئ بالكالئ, a sale contract whereby the commodity is not delivered and the price is not paid. Now, this has been practically practiced, by the way. It's practiced now in our days. Like, let's say, when someone would buy a house which is still under construction or whose construction hasn't started yet. And of course, such a buyer will not be requested to pay the price in full in advance. Maybe he will be asked, let's say, only to make, let's say, a down payment, and he'll be supposed to pay the price, let's say, installments or commensurate with the stages of completion of the project itself. So here we find the people are engaging in بيع الكالئ بالكالئ, and it's the Fiqh Academy has accepted that. بيع الاستصناع, like in بيع الاستصناع. In istisna contract, the seller is not delivering the commodity or the commodity of sale, and the price is not paid in full, at least not paid in full by the buyer. So it's بيع الكالئ بالكالئ, and the Fiqh Academy has accepted that. And we have also another application for this, such as, let's say, sale of currencies. We know that the people are not supposed to, when doing money exchange, they are not supposed to delay the payment of currencies. The transaction has to be on the spot. Now, of course, this is, I mean, the hikmah or the wisdom behind such a prohibition is evident, it's obvious, because if the Sharia would prohibit, let's say, if the Sharia would permit people to engage in future contract in currencies, then this would lead to excessive speculation. This would lead to gambling, like what happens now in the so-called future contracts or in financial derivatives in general. You find people selling and buying commodities, basic commodities, like let's say what happens in the commodity market, or people are selling, let's say, currencies on future basis in a way that would necessarily harm one of the two contracting parties, because it's used as a gambling platform. So let's say in future contracts in general, people, for example, would sell oil on future basis, and the transaction will not end in actual delivery of the commodity. Rather, it will end in settlement of the price difference. For example, I would sell you a certain quantity of oil on future delivery basis. Let's say the transaction would be or supposed to be executed after 6 months from now, and we fix the price. So we say, for example, that the price per barrel, let's say it's $100. So I've already sold you this quantity of oil for this strike price. It's called the strike price, and we, after 6 months from now, will see the market price then. So if the price has appreciated above $100, which is the agreed upon price, then who wins in this case? The buyer, of course. So the seller in this case will pay the difference between the agreed price and the market price. And if the price goes below the agreed price, the market price after 6 months will drop below the agreed price, which is $100. Then in this case, the seller would win. So in this case, the buyer would have to pay the difference between the agreed price and the market price. So obviously, I mean, the two contracting parties have no interest whatsoever in executing the contract. Rather, all they're interested in is only settling the price difference. It's a form of gambling. It's a form of gambling. This is the kind of gambling which the Sharia would never accept. It's like based on zero-sum game. Just what happens is very similar to what happens in gambling casinos. Now, of course, you see the form of, nowadays we have different forms of gambling. The concept of gambling in Islamic law is never limited to let's say, to the game of chances, like let's say, like playing the roulettes or let's say buying a raffle ticket. The concept of gambling encompasses financial deals, like the ones that take place on the commodity market or in the financial market in general, or in the money market. I mean, the cases of futures and forwards and options like call option, put option, derivatives in general. So such an arrangement with future delivery of both values could be used to gamble. It's a zero-sum game in which one party wins and the other party loses. And what one party wins equals what the other loses, which is the concept of the zero-sum game. Such deferment of both values is definitely unacceptable to the Sharia estimate, because if the Sharia would permit this, then the Sharia would implicitly permit gambling, and gambling is unacceptable. يا أيها الذين آمنوا إنما الخمر والميسر والأنصاب والأزلام رجس من عمل الشيطان فاجتنبوه. So this is the kind of maisir, and maisir means gambling. Now, apart from this, how about if, let's say, people they don't want to speculate, rather they want to just to hedge. I mean, they want to use the contract of a forward contract in which neither the commodity is delivered nor the price is paid. So they will use such a forward contract only to hedge, because they fear that, for example, I'm a producer of, let's say I'm a manufacturer. I'm a manufacturer, and I need to, let's say, always secure the raw materials that are required for my manufacturing. And I fear that their market price may appreciate in the future. So I would enter into a forward contract. I mean, this is not done, of course, in the organized market. This is just a forward contract that normally happens outside the organized markets. So I will, let's say, engage in a forward contract with a trader who owns who sells, let's say, the raw materials that are normally used in my manufacturing process. So I enter into a forward contract with such a trader, and we fix the price for future delivery. Obviously, the intention is not speculation, because the transaction will end in actual possession of the commodity and in actual payment of the price. So if we apply the hadith that says نهى النبي صلى الله عليه وسلم عن بيع الكالئ بالكالئ, then we'll end up saying such arrangement is unacceptable to the Sharia. But again, if we ask ourselves why would the Sharia prohibit such an arrangement, even though it realizes my interest and it realizes the seller's interest, and it's not involving any gambling, it's not involving any, like, let's say, subterfuge to interest. So again, if we apply the outward meaning of the hadith, we'll have to say such a transaction is unacceptable. But if we consider the Sharia objective behind such a prohibition, then we'll have to say that such an arrangement is acceptable, because obviously the reason for a prohibition is to avoid speculation, to avoid gambling. And then Nabi Sallallahu Alaihi Wasallam عن بيع الكالئ بالكالئ, because بيع الكالئ بالكالئ will lead to gambling. And gambling is unacceptable to the Sharia Islami. But if the transaction is not leading for gambling, then we have to say that such a transaction, such an arrangement is acceptable to the Sharia Islami. And which is the case, by the way, I mean, on istisna, which has been condoned and accepted and approved by the Fiqh Academy, because the contemporary application of istisna involves disfigurement of both values. So if we permit it in istisna, why wouldn't we permit it, let's say, in that arrangement? And the same also may also, the same concept may also apply to currencies. So sometimes Islamic banks, they need to hedge against a sudden and unfavorable change in the market exchange rate. Just like what happens, for example, in usance LC. You know, in usance LC, which is used in trade finance, Islamic banks wouldn't have to pay the price to the exporter right away. The bank would have typically like 3 months to pay the price of the goods to the exporter. So here the bank would need to hedge against a sudden and unfavorable move in the exchange rates. So in practice, you find Islamic banks engaging in the so-called wa'd, bilateral wa'd agreements. So they call it bilateral wa'd agreements, whereby the bank would provide a promise to sell, for example, USD against Turkish lira, and the bank will try to find someone who will be willing to give the bank a counter commitment to exchange the dollar for Turkish lira. For example, the bank has Turkish lira, and the bank is supposed to pay after 3 months from now to settle an invoice with USD. So, and the bank fears that there will be, the USD will appreciate against the Turkish lira. So the bank would be interested in finding someone to give a counter commitment to sell USD for, let's say, a fixed and predetermined exchange rate. So normally the Islamic banks will do like a bilateral wa'd. Now, what does a bilateral agreement or a bilateral promise boil down to? It's a contract, because if I'm bound, let's say, to execute this money exchange, and the other party is also committed and to do the money exchange, then effectively this is a contract. So rather than, let's say, applying these tricks and using bilateral wa'd to avoid sarf contract, because we know that sarf contract has to be on the spot. But if we, expand the concept of what we call bay' al-kali' bil-kali, and exclude only the cases where the transaction is leading to riba or leading to gambling, and whatever, let's say, is not leading to riba or gambling would be, I mean, we deem it as acceptable. Then we'll have to say that the bank can have like an explicit surf contract with the other party, with the other contracted party, whereby both parties, of course, would do the money exchange in the future without, I mean, actual payment of any currency. So again, if we accept such a rationalization of the Sharia text, then we'll have to end up that we can end up saying that the bank can engage in a future surf contract as long as the contract is meant only for hedging and not speculation. So a lot of transactions that, I mean, would be accepted then as long as they are meant for hedging and not for speculation. While if they meant for speculation, then of course we'll have to say that such an arrangement is acceptable to the Sharia Islamiyya. So in other words, we can fix the money exchange rate for future commitments. And by the way, you find some fuqaha like Imam Shafi'i, Imam Mawardi, who subscribes to the Shafi'i school, and to Imam Mawardi, he says that if there is any delay in payment, like in surf contract, if this delay wouldn't lead to gambling or wouldn't lead to riba, then this delay can be tolerated. So, I mean, this supports the ijtihad that we have to consider the Sharia objectives behind the specific Sharia rules. Now, I know that the time is limited. I'll try to cover only one or two applications. So when it comes now to benefiting from loan contracts, we know that the Sharia prohibits the creditor from benefiting from the loan contract, and the contract has to be interest-free. نهى النبي صلى الله عليه وسلم لكن الحديث كل قرض جر نفعا فهو ربا. كل قرض, any benefits, any material benefits that the creditor may derive from the loan contract is deemed as riba, so it's haram. Now, is it really? I mean, is the case really so? Because sometimes the creditor may also benefit from the loan contract in a legitimate way. For example, if I lend you $1,000 interest-free, and at the time of payment you come back with $1,100 extra. I mean, and this $100 extra was not stipulated in the contract. It's like a pure gift from your side to me, because you just wanted to reward me for the favor that I have rendered you earlier. Is this acceptable? Definitely this is acceptable. And Nabi Sallallahu Alaihi Wasallam used to do that. Nabi Sallallahu Alaihi Wasallam said, خِيَارُكُمْ أَحَاسِنُكُمْ قَضَاءً. The best of you are those who, I mean, reward the creditor by returning the debt with increments, as long as this increment can be deemed as pure gift, which means that it's not stipulated explicitly or implicitly. It's fine. I mean, the creditor can keep it, can take it. So this is an exception then. This is an exception. Now, how about, let's say, if the loan contract would benefit the creditor and would benefit the borrower without the benefits that the creditor derives from this loan contract, without it being at the expense of the borrower. For example, I'm a financier, and I'm a merchant at the same time, and you are, let's say, a farmer. So you approach me for financing. You ask me, for example, to provide you with $10,000, which will be used to spend on your land to cover the expenses of, let's say, growing certain crop. And I will make a condition that I'll be lending you $10,000, but only if you commit to selling me your produce, your harvest. So again, I'm giving you $10,000, but only if you undertake that you will be delivering the 10,000, let's say, you produce, rather than, let's say, selling it in the market, you are committed to sell it only to me. At what price? The market price. So obviously, in this case, doesn't involve, I mean, any interest, because let's say the borrower would have to sell the harvest in the market, and the agreements, the stipulation as made by the creditor, that he would be buying the harvest, the produce, for the market price. So it wouldn't make any difference to the borrower, to the farmer, to sell it to the same creditor or to sell it to a third party in the market, because he would be selling it either way, would be selling it for the highest price possible, which is the market price. So if we say that كل قرض جر نفعا فهو ربا, if we take the outward meaning of this hadith, then we'll have to say that such a loan contract is unacceptable to the Sharia. Why? Because the creditor is deriving a benefit from it, because he's securing a source of income, he's securing a deal which could he profit from, because he will be, like, let's say, getting this produce and possibly selling it at the market at higher price. So it's not like a qard hasan in the sense that the seller or the creditor is not making any benefit. No, he's deriving some benefit for it, because he's like committing or getting a commitment from the buyer, from the borrower, that he would have no right but to sell it to him, to the creditor. So it's like a benefit for the creditor. But is such a benefit unacceptable to the Sharia? We have to look into the Sharia objective. The Sharia, according to Sharia rules, to Maqasid Sharia Islamiyya in the context of Islamic financial law, as long as the borrower is not incurring any expenses, is not, let's say, he's not benefiting material, or he's not incurring any expenses, so that it doesn't cost him anything, let's say, to get that commitment or to enter that commitment with the creditor. So such a benefit would be acceptable. Why? Because it doesn't come at the expense of the borrower, because it's costing him nothing. He would have to sell the produce ultimately in the market, and he will have to sell it only to the creditor in this case, but at the market price. So, we'll sell it for the highest price possible, and it doesn't make any difference to him whether he sell it to the creditor or to a third party in the market. So this a benefit that's accrued to the creditor doesn't come at the expense of the borrower. So based on Maqasid Sharia Islami, we say such a commitment or such an agreement has to be deemed as valid. But if we take again the outward meaning of كل قرض جر نفعا فهو ربا, then we'll have to say this is haram. But if we consider the Sharia objective, we would say that this is halal. And this ijtihad is also supported by certain ijtihadat in the literature of Islamic law, like suftaja. According to fuqaha, especially the Hanbalis, they will say that there is no harm in suftaja. And suftaja is a loan contract in which you make a condition as a creditor. You tell your borrower that I'm lending you this money, but only if you pay me this money in a different country. For example, I'm giving you the loan in Turkey, but only if you repay me the debt, let's say in the say, for example, in Indonesia. So I will be, as a creditor, I'll be making a benefit in that loan contract. Why? Because I'll be, for example, saving the expenses of transferring the money over to Indonesia. Or even, let's say, transferring the money would involve any risk, then I'm here with this condition, I'm avoiding this risk. So such a condition is accepted by the Hanbali, which is, and this issue is called suftaja. And to them, this is acceptable, even though the creditor is making a benefit from it, saving the expenses of money transfer or avoiding the risk of money transfer. So as long as this benefit doesn't come at the expense of the borrower is not harming the borrower anything, because maybe the borrower, let's say, has an office in Indonesia, he has an agent, so it wouldn't make any difference to him whether, let's say, to repay the debt in Turkey or in Indonesia. It wouldn't cost him any money. So in this case, the fuqaha will say this is acceptable. So again, this is nafa. This is a benefit which is the creditors deriving, but it's fine because it's not at the expense of the borrower. So again, considering the Sharia objective behind the Sharia rules would help us, add flexibility to Islamic financial law and also rightly implement the Sharia rules. Because it's feared that the contemporary ijtihad has necessarily burdened Islamic financial law with unnecessary rigidity or with excessive flexibility or leniency. And from the examples that I have mentioned so far, I've mentioned examples pertaining to unnecessary rigidity and also examples for the excessive leniency. Leniency in condoning and accepting certain like cash financing in Islamic financial law. Cash financing is unacceptable. cash financing in a profitable way is unacceptable because it defeats, like let's say using ta'ina or tawarruq or salam munazzam or any other form of transaction that would end, whose end result is extending cash to the client in a profitable way. In a profitable way, you give cash to the client in a profitable way, whether through ta'ina or tawarruq or salam munazzam or any form. This transaction in itself is unacceptable to the Sharia Islamiyah. And we have some contemporary ijtihadat permitting it, like permitting tawarruq or permitting ina. Now, I don't want to discuss this ijtihad from a legal perspective. To go to and quote the madhahib al-fiqhiyya, even though the madhahib al-fiqhiyya wouldn't accept that. But if we consider the Sharia objective behind the prohibition of riba, we'll have to say that such cash financing is unacceptable. So Islamic banks are not supposed to provide cash financing to the clients unless, let's say, this extension of cash comes on the basis of mudaraba or musharaka, an investment contract. But just to give, let's say, cash to the client in a secured, profitable way, this is the very essence of riba. Because what's the essence of riba? Riba is not, the concept of riba is never limited to the technicalities of, let's say, signing a loan contract with interest, just like what we see in conventional financing, whereby the financial institutions would use a loan contract, and the loan contract, of course, would be facilitating the extension of cash to the borrowers in a very secured way. So what risk? We find only the credit risk, which can be totally eliminated by taking securities. But apart from that, the profit is secure. So this transaction, in essence, giving cash to the clients in a profitable way is unacceptable to the Sharia, regardless of the technicalities or the form or the structure that a financier may use to extend this cash, whether it's through explicit loan or through implicit rule. Implicit loan, like what? Like ina contract, like tawarruq contract, like salam munazzam contract. So all these transactions boil down to riba. Why? Because we have to consider what we call the Sharia objective. The Sharia says riba is haram. Riba, I'm not discussing riba of sale. I'm just discussing riba of debt. So the Sharia says riba of debt is haram, which is extension of cash on increment basis, on interest basis. This is in itself haram, regardless of any form that the financier may resort to or use to extend this cash. So, but this Sharia objective has been neglected, unfortunately, in some cases in Islamic financial law, because we see multiple Islamic financial institutions extending cash to the clients in a profitable way, in a secure way, using the technicalities of a sale contract like ina or tawarruq. So this defeats the very purpose behind the prohibition of riba. And if we accept this, if we tolerate this, there will be no logic left in the prohibition of riba. So any financial institution, rather than, let's say, giving explicit loans to the clients, they would resort to the technicalities of a sale contract. Like, let's say they will keep a commodity and they will use this commodity to justify the extension of cash for clients. For example, a conventional institution, rather than signing the explicit interest-bearing loan contract, they will use a technicalities, like, let's say, of a sale contract. So every customer that comes for financing, they would sell him a commodity on credit, and then they will buy it back on cash prices right away. And then the same commodity will be sold over and over and over to all people seeking finance. So this will defeat the very purpose of the prohibition of riba, and then the evils of riba will, of course, will manifest themselves in the society and in the economy. So again, we have to consider the Sharia objectives. Allah subhanahu wa ta'ala has never prohibited something or permitted something but for an objective. So all we have to do is identify, understand this objective, and only then we'll be able to rightly implement the Sharia rules and avoid the prohibitions. So this is all I wanted to discuss with you today. I know that I have skipped certain points that I wanted to discuss further, but due to that time constraint, I will stop here and open the floor for discussions and questions.
Thank you, Professor, for the insightful and valuable lecture, which provided really a significant perspective on the subject of Islamic finance and Maqasid Sharia. We now open the floor for the participants to engage in further discussion and pose their questions. Regarding the questions, you may write your comment in the chat box if you are joining via Zoom, or the comment section in the YouTube. So we already have a couple of comments and questions in the comment section, YouTube. So we start with Professor, we cannot hear you. If you're... Okay, so the first question, comment, it's from Efinan, saying defining the objectives behind the Sharia rulings would alter change from the opinion of one to that of another. Thus, it represents a kind of subjective knowledge that is not standard for everyone. Then they ask a question, what is the methodology that you suggest for precise identification of the objectives?
Well, such a task will not be, handled by anyone. This is something that will be, handled by Sharia scholars who understand the precepts and basics and fundamental Sharia rules, and also ilm usul fiqh and Maqasid Sharia Islamiyya in particular. So only if you, let's say, if you happen, let's say, to study Islamic financial law, you studied usul fiqh, you studied also the Maqasid Sharia Islamiyya, only then you will be able, and also, of course, more importantly, to be aware of the contemporary applications of Islamic financial law. So you need to know how the industry works, and how Islamic or how banking in general works. Only then, if you study these things, and then you'll be able, of course, to identify or study or appreciate Maqasid Sharia Islamiyya behind the specific rules. Now, most of the efforts of Sharia scholars have been towards the studying the general Maqasid Sharia Islamiyya, and the efforts to identify the specific Maqasid Sharia Islamiyya are not that really, they are really limited so far. And that's why this explains why sometimes we find the fatwas departing from the Maqasid Sharia al-Islamiyya. And it's of course, it's legitimate for anyone, let's say, to ask this question. Why, for example, we go to a conventional financial institution and we deal with this institution and you tell us that this is haram? Why we go and we seek the same service, we obtain the same service from Islamic financial institution, and this is halal? So, such a confusion sometimes is what we call the practical result of failing to appreciate the Maqasid Sharia Islamiyya behind the specific rules of Sharia Islamiyya. The failure to understand and appreciate the prohibition of riba. Because if you don't understand or appreciate the prohibition of riba, your ijtihad could be wrong, could be conducive to the same evil of riba. So understanding the Sharia rules, the Sharia objectives, and of the Sharia rules, very critical and very important for the right applications or implementations of the Sharia rules. And this task, of course, as I said, can be undergone only by the Sharia scholars who study usul fiqh, who study Islamic financial law, who knows the fiqh literature in general. So it's not like open to anyone, because if we, let's say, Fiqh Academy has done some good work in this regard, but they didn't rationalize or justify their resolutions. But if we, let's say, want to go one step further, then we'll have a body, a legal body, like let's say, like Fiqh Academy, doing ijtihad, issuing resolutions, and supporting this ijtihadat with Maqasid al-Sharia al-Islamiyya.
Thank you. So there is another comment and another question. Bashi is thanking you, Professor, very much for the insightful lecture. Then they ask, I would like to ask, when we analyze contracts based on Maqasid Sharia, are we limited to the 5 essential Maqasid, or do we also consider broader dimensions beyond them?
Well, the five Maqasid Sharia Islamiyya relate to the general or ultimate objectives of the Sharia Islamiyya, or the so-called the macro Maqasid, al-Maqasid al-Amma. But our discussion today was related to the so-called Maqasid al-Khassa, specific Maqasid, the Maqasid Sharia behind every single Sharia rule. And this concept is never limited to, by the way, to Islamic financial law, even to muamalat in general, like it's in marriage contract. Marriage contract has its own maqasid. Any agreements in Islamic law has its own maqasid. Criminal law, penalty law has its own maqasid. So we need to study the specific or macro maqasid in order to rightly implement the Sharia rules. And this, as I said, has nothing to do with the macro maqasid. It's true that, let's say, implementation or observance of the specific or macro maqasid will help ultimately achieve the macro maqasid. Because the macro maqasid in the field of finance, of course, is the preservation of wealth. And preservation of wealth will not be achieved unless we avoid the evil of riba, we avoid the evil of gambling, right? And we protect the contracting parties' rights. And so all these specific rules in the field of Islamic financial law contribute to this ultimate objective, which is what? Preservation of wealth, avoidance of injustice, protecting contracting parties, avoidance of gambling or uncertainty. So, I mean, of course, the maqasid, the macro maqasid, help observe and maintain the macro maqasid. So the micro are meant to ultimately preserve and protect the macro maqasid.
Thank you. So the same participant has another question. They said, if I lend an amount, say $100,000 to a borrower, and we mutually agree that the loan will be repaid after 2 years with an adjustment based on the prevailing inflation rate at that time, would this be considered permissible? If so, would such an arrangement amount to deriving a benefit from the loan contract in light of the relevant hadith?
Yes. You see, the currency that we use nowadays is definitely different from the currencies that were in circulation long time ago. You know that the currency that we use nowadays, let's say the paper money or the fiat money, doesn't have any intrinsic value. So its value is technical, right? I mean, the technical means that the government attached some value to this currency, but it's on its own has no value whatsoever. Its value is very, very trivial. So the technical currency that we call it technical currency, عملة اصطلاحية, is different from the gold or silver. So it's gold and silver is, of course, is intrinsic currency with intrinsic value. So when the paper money that we use, or our current currency, or the fiat money, or the money that whose value is technical, when it loses a significant when it significantly loses its value, then it becomes a new currency. So it's no longer the same. For example, the Syrian pound, Syrian lira, before the civil war started, before the revolution started, 1 USD used to equal around 50 Syrian pounds, 50 Syrian lira. Nowadays, $1 is equivalent to around 11,000 lira. So if there was, let's say, a debt agreement, or there was a sale contract on credits, which has not been, I mean, the price in which it hasn't been paid yet. So after this, let's say, significant and excessive inflation, would we expect let's say the borrower or the debtor in general to repay the debt in the same amount? Of course, this is injustice. This is an injustice inflicted upon the creditor. See, Allah subhanahu wa ta'ala says in the Quran, فَلَكُمْ رُؤُوسُ أَمْوَالِكُمْ لَا تَظْلِمُونَ وَلَا تُظْلَمُونَ. Sometimes the injustice in loan contracts or in debts in general is inflicted by the borrower over the creditor. It's not always the other way around. People think that it's always the creditor who may inflict injustice upon the borrower. No, the injustice could be inflicted by the borrower over the creditor. Like, let's say, when you repay the debt in a lesser value, or when you repay the debt in cases of inflation, but without considering the inflation rate. Now, if I would say that, to be brief, if we notice that, let's say, the currency has significantly, let's say, lost its value due to inflation, then we have to take into account, when settling debts, we have to take into account the inflation rates. Because after the significant inflation, the currency now is different from the old one. Like, let's say, again, the Syrian lira, the Syrian pound, or the Syrian lira, even though it's still called lira or pound, Syrian pound, but it's no longer the same. Now, after, let's say, now it's lost value to USD, that, let's say, $1 would equal 12,000, as if the Syrian lira is no longer the same. It's different currency altogether. So when we demand, for example, or when we ask, let's say, the borrower or the debtor to take that into account, we are not, let's say, asking him to pay interest to the creditor, because even if the borrower is paying extra money, still the creditor not making any benefits, it's not deriving any benefit from it. But the riba which is prohibited in Islam is the increment which is paid by the borrower to the creditor, and it comes at the expense of the borrower in a way that would benefit the creditor. But if we consider the inflation rate, for example, we ask the one who has incurred some debts before the revolution started in Syria, we ask him now to take into account the inflation rate and to pay back to the creditor an amount whose purchasing power is equivalent to the currency before the debt was initiated. If the inflation rate was taken into account when settling the debt, then the creditor is not making any benefits, right? So if the creditor is not making any benefit, then there is no riba. So it's wrong. It's definitely wrong not to consider the inflation rate. But I mean, practically, can we make it as a rule that, let's say, we have to consider the inflation rate, let's say, whenever, let's say, the currency loses its value significantly? No, we cannot generalize. We have to look at every case individually and individually. So it's on case-to-case basis. We have to distinguish between two scenarios. A scenario, for example, when the borrower has collected the debt and purchased with the debt, let's say, certain assets whose market value appreciated with time. So when we demand this borrower or debtor to repay the debt considering the inflation rate, he would not be harmed, because the debt was used to purchase assets whose market value appreciated with time. So if we ask him to consider the inflation rate, he wouldn't be harmed, because he wouldn't be paying extra money from his own pocket, right? But the other scenario, maybe the debt was incurred for consumption basis. So if someone would, for example, someone has borrowed, for example, 10,000 lira, for example, before the revolution, and he spent that money attending to some urgent needs, medical needs, or let's say food needs, and then we ask him to consider the inflation rate. He could be harmed in this case, especially if he's, let's say, a salaried person. He has a fixed income, and his income, his income has increased, but not in a way that's commensurate to the inflation rate. So if we ask this person to consider the inflation rate perfectly, then the borrower or the debtor will be harmed in this case. So that's why I say that we have to consider every case individually. So if, let's say, if someone has spent the debt already for consumption basis, we ask him to, like, let's say, to consider the inflation rate, but not necessarily to consider it perfectly. To pay back, considering the purchasing power in full. Adopting the new exchange rates. Now we tell him that, let's say, try to reach a settlement with your creditor, pay him extra money, but not necessarily to the full extent that would cover the purchasing power. So we have to look into every single cases individually. But altogether, we cannot say that if we consider the inflation rate, then we are permitting riba, because money, as long as it's technical, it's not similar to gold and silver. It doesn't have a value on its own. So when it loses value, it becomes like a different currency. That's why if the borrower would increase the number of the currency paid in the debt, then he's not paying extra, let's say, money. He's not paying interest. He's just returning part of the purchasing power of the currency that he's borrowed.
Thank you, Professor. Thank you for joining us today in this valuable webinar. I would also like to thank the participants for their valuable comments and questions. And we look forward to seeing you, both you, Professor, and the participants, very soon at another webinar, inshallah. Would you like to add something, Professor Abu Zaid?
I would like just to thank you for inviting me over to this webinar.
Always.
And inshallah, we'll meet you, inshallah, in person, inshallah, in Turkey. Thank you so much.
Inshallah. Thank you so much again. And assalamu alaikum wa rahmatullahi wa barakatuh. Fi amanillah, everyone.